What's going on, guys? It's Killer. Welcome back. Going to be doing a video update here covering Bitcoin from a structural standpoint and of course updating my higher time frame thesis. Now, it has been a while since I last uploaded a video, and the reason is quite simple. There hasn't been anything to update, and I'm not going to post just for the sake of posting, right? These videos are supposed to update my live analysis in real time and obviously give you an idea of what I'm expecting on both, well, the mid to lower time frame and the higher time frame, right? So I'm not going to post just for the sake of it. I only post when we are getting to a critical decision point in terms of trend direction, and we are starting to see that we are approaching key areas for either bullish continuation or bearish continuation. So let's get started. First and foremost, I'm going to go over to the monthly time frame here and analyze Bitcoin at the moment. So we can see, obviously, looking at the monthly time frame, we had a very strong push through after an indecisive candle. So the objective of this wick here was simply to take out short positions, and we've done a great job at doing that. The next monthly candle opens, has a quick push down and then a massive squeeze towards the upside. So we formed our higher low, push all the way towards the upside, was very close to filling that CME gap from this previous breakdown here. And matter of fact, if we mark this FVGO and imbalance, we pretty much filled exactly this price region, and now we are seeing a rejection back downwards, of course, right? So what does this tell us? Well, it tells us that we are still in a macro downtrend. We had 1, 2, 3, 4, 5 red months, so it was due that we get some relief on the higher time frame. And we can see that Bitcoin pumped all the way to 83k, creating a 38% move towards the upside whilst the trend was still bearish, right? So what does this tell us? Well, first and foremost, analyzing this, we can see objective was take out shorts. We took out shorts and had a rejection back downwards, and we are hovering around where that monthly open is sat at 76.3k. And we can start looking on the lower time frame here, and that's precisely where the price around about bounced from. We had deviation below the previous wick low here at 74.8, and we are having a bounce from this area. So it is expected we could see a bounce or a lower time frame push towards the upside, but we have that gap at 79k before continuation towards the downside. But I'll get onto that after covering my monthly analysis. So first and foremost, we can see that we've already had the objective of taking out a bunch of short positions. We've had our wick high form at 83k, and now we are seeing more of a rejection. So what does this tell us? Well, at the moment we still have a week left, but it's telling us that we have more sellers in control. Now if we start pushing up to this 79k gap, we can see the candle is going to slightly shift, so it's going to look like more of a shooting star. Then the current closure is looking like a doji, right? So at the moment we can see sellers are significantly in control. Moving over to the weekly here, we can start marking out key areas to observe as well here. So we have our previous range high at that 73k region, our previous range wick low before obviously this massive impulse towards the upside, and we can see Bitcoin at the moment is testing this key area on the weekly time frame. So what does this tell us as well? Well, it tells us that theoretically the trend is bullish from this perspective, right? So if we hold this area purely from a structural perspective, not involving historical price action or cycles, we can push back upwards. It's very simple. On the other hand, if we start forming lower highs and pushing right back down to here, we're going to build liquidity, and there's a very good chance we end up pushing lower, meaning that this was just massive deviation, fill the imbalance before obviously pushing downwards back to this 65k region. So we have two scenarios. Scenario number one, we hold this area, start pushing towards the upside. Your bullish confirmation would be flipping the 80k region yet again. So if we start pushing towards the upside from here, we flip 80k, we are definitely going to run the highs, and we are likely going to extend to 84, 85, and 86. That is if we hold this 74k region. This is a critical point for bulls, right? We need to hold this because this is the area we just flipped on the weekly, right? On the other hand, the bearish scenario is if we lose this area, well, then we have a bunch of liquidity sat below 70k. It's going to result in a swing fail, a lower high, and a push towards the downside. And if we start marking where we have that gap around here on the lower time frame, which is around 79k, and we move all the way down to the daily here, we can see we have multiple confluence around where that gap is as well. So let's say we had the sweep, right? We have another little gap on the lower time frame at 76k. This is probably going to get taken as well. We have a gap above us and a gap below us. So what does this tell us? Well, we know both are going to get filled inevitably. However, if we start pushing towards the gap towards the upside, let's say, and we cannot flip this gap, it's going to result in a exhaustion gap breakdown over the weekend, and we are likely going to have continuation towards the downside. This is going to be yet another lower high before a push downwards, right? So if we cannot flip the gap, we push lower. If we can flip the gap, like I said, above 80, then we look for continuation to above these highs and possible deviation into acceptance, and then you can look for shorts or re-entry on shorts around here yet again. But this is going to be quite an important confluence zone because it's where the price first had a significant structure shift. We had this parabolic uptrend for the past 40 days. Well, I wouldn't say parabolic, we had this gradual uptrend for 40 days, and we saw the shift directly from here. So textbook analysis here is if we cannot flip the previous break of structure, we push lower. So that's what I'm looking at on the daily and the weekly time frame as well. However, if we start going over to some previous charts, which I posted on my X here, this is one illustrating what happens after May during every single bear cycle. And forgive my mistake, I put March here, but if we just shift this along by 2 months, because this is the monthly time frame, we can see we still had red after the May period. So we can see here 2019, we had a push downwards after May during the bear market. We had continuation towards the downside during a bear market. We had 2022 starting from around this price region. We had continuation towards the downside. So pretty much after May, the market has de-risked, right? And this would make sense given that S&P, Nasdaq, and all of the stocks are going parabolic. It would make sense for them to eventually correct, which I have another post I want to cover, which is this one, right? And if we start measuring and looking at every single bear cycle for Bitcoin, measuring up with S&P, we can see that it is taking approximately 300 to 400 days for a traditional bottom to be formed. And every single time Bitcoin has formed that bottom, S&P has had that capitulation before upside. Capitulation before upside, and we can see around that period we haven't had that retrace or capitulation towards the downside before upside. So what does this tell us? Well, based on history here, it's telling us that S&P could actually have one more retrace towards the downside where Bitcoin forms its bottom, wherever that may be. It might be a higher low bottom, who knows? All we know here is that when S&P has its next drop throughout 2026 is likely where Bitcoin is going to form its bottom based on just history alone. So this is another thing which I'm observing, which coincides with the fact that after May, we usually have extended pushes towards the downside. Another chart which I want to bring up is the ZEC comparison as well. And every single time we can see coincidentally when ZEC pumps, it marks a top for Bitcoin. This isn't speculation. This is literally a fact, right? We can see back in December 2017, ZEC started pushing up aggressively. It formed a top. 2019, same principle. 2021, 2022, we can see the exact same principle. And I used this as well as a small metric to time the top this cycle around, which was at 126K. We saw ZEC pushing towards the upside, and we can see on the higher time frame primarily it marked that top, and we see another push from ZEC towards the upside, whilst Bitcoin is pushing towards the upside as well during a macro downtrend. So what does this tell us? Well, it could tell us that okay, Bitcoin is going to form another lower high before pushing lower, right? So this is another subtle metric. I wouldn't give this crazy amounts of confidence. I would just say this is a very subtle one which I am observing. Moving on to obviously the traditional bear cycles, 300 days plus, we can see that Bitcoin has never had 3 green monthly candles in a row. So if we happen to do that this time around, it would be different, which would mean this May candle will close bearish. However, another subtle confluence just based on history, we do not see more than 3 green monthly closes during a bearish trend. Moving on to another confluence, which I just want to quickly clarify, is USDT dominance. We can see we have been mirroring 2021, 2022 price action. So I only thought it was relevant to show this chart as well. We can see we had a significant shift of the previous break of structure here. We front ran that retest, and that is equivalent to this time around where we had the significant breakthrough, coming all the way back down, front running that retest, which would be equivalent to where Bitcoin topped before obviously having this push right back upwards. And we can see when USDT dominance was in this range was where Bitcoin was reaccumulating in its bear market, right? We were seeing accumulation happen. So if we mimic the same type of movement, it would mean that we range above this price region before obviously pushing back downwards. This would be the bull run for Bitcoin. And if I go over to my USDT chart as well, you will see as of now, based on my analysis, the updated version here, we front ran that low and we are pushing towards the upside, right? So First and foremost, USDT dominance is actually looking more bullish than bearish. And if we follow 2021 and 2022, there is a very good chance that USDT front runs this previous retest and we start forming a range or something like this where we have a complicated range before obviously the bull run begins, where we start breaking back downwards. So, little update, that is what I'm observing. Hopefully that helps, and I'll catch you guys later. You can see